Thank you for joining us today. The program is about to begin. Please make your way to your seats and silence your cell phones. Please take your seats. The program will begin momentarily.
Thank you so much for being here. It is a privilege for me to be here. I'm Andrew Ross Sorkin, here with Mike Wirth of Chevron. We have so much to talk about when it comes to the world of energy, when it comes to the world of fossil fuels, when it comes to the idea of transition, when it comes to ESG and wokeism and anti-wokeism and all sorts of other things, technology, nuclear, and more. And that's what we're going to do over the next 50 minutes. And we want this conversation to be as interactive as possible. We're even going to get into a little bit, I think, of what's taken place in Russia over the weekend. But here's where I want to start with you, if you'd indulge me. There was just an interview that my colleague, Rebecca Blumenstein, of NBC News president, did with Mary Barra, CEO of General Motors. And in that interview, Mary Barra said, come 2035, GM will not be making light vehicles with combustion engines at all. Zero. And so I'm so curious when you hear that, as somebody who's in the fossil fuel business, in the combustion engine business, if you will, whether you believe that, whether you say that's not going to happen really, and if you believe it, what you think you need to do about it.
All right. Well, hey, thanks, Andrew. It's great. It's great to be here. And sounds like a simple set of questions we've got coming. Look, let me start with that. I actually popped in to listen to a little bit of Mary's comments. Mary's a good friend. In fact, earlier this year, I took a ride in the new e-Hummer, and we went off-road in it, and Mary had set this thing up for a group of us, and they're doing amazing things with their electric vehicle line. Their strategy, which she referred to today, is to get completely converted on their light-duty platforms to electric drivetrains by 2035. And I think Mary would tell you, she didn't go too deep into it now, but it's a huge undertaking. It's massive retooling and massive new supply chains that GM's working on building, from not just the batteries, but going upstream of the batteries to the critical minerals and things like that, which have their own set of challenges. But I have no doubt that GM's committed to that strategy. I think they'll make it. And Mary's absolutely committed to it.
So you think they're going to make it? And do you think that that may be GM. Do you think everybody's going to make it? Or when you sit in your boardroom with your other executives and you say, that's the date that we got to mark our calendar. You say, actually, nobody really hits the date. There's always a delay. There's this or that, and we should prepare for it this way.
Well, so I'm going to get to the impact on us in a second, but you're putting your finger on a really important point. Tesla's had great success. BYD and some of the Chinese electric vehicle manufacturers have made tremendous progress. Rivian is working on it. You can just go down the list of companies. What you can do when you're manufacturing a few tens of thousands or hundreds of thousands of vehicles gets infinitely harder as you and everybody else endeavor to build millions and millions and millions of these every single year. And so I think one of the challenges that looms out ahead is, in fact, these new supply chains. Which originate in West Africa, in Latin America, for cobalt, manganese, lithium, nickel, and they predominantly run through China for the processing of these minerals today. So the amount of minerals that are going to need to be extracted and processed are going to increase exponentially over the next decade or two, and it likely needs to go on new supply chains if the issues with China that you didn't mention in your opening set of things we could talk about remain an issue in the global economy. So scaling this gets to one of the real challenges in the energy system, which is things that work at small scale, how do we scale them up?
Right.
And that's one of the big challenges. Let me get to the impact on our business, which you asked about. So just a couple of quick facts to ground things. Transportation is only the 4th largest category of greenhouse gas emissions globally. Number 1 is power generation. Number 2 is agriculture, forestry, and land management, both about 25% each of the global greenhouse gas emissions inventory. About 20% is industrial emissions, and about 15% is transportation. So, and transportation includes aviation, off-road transportation, marine transportation, light-duty transportation. So EVs are working in a part of the transportation market, which is a part of the greenhouse gas emissions inventory. Right. If you look at our business today, the world uses about 100 million barrels of oil a day. About 25% of that goes into light-duty transportation. So even if all of light-duty transportation, not just GM, but everybody, was electrified immediately, you would have 75% of oil demand untouched by it, because that goes into ships, it goes into off-road, mining, agriculture, long-haul trucking, aviation, petrochemicals, a whole series of things that cannot be electrified today. And so the demand for our products is likely to continue to grow, even as we see great progress on EVs, even as we see great progress on renewables. Because the population of the planet grows, the number of people living a middle-class lifestyle continues to grow, and all of that is driving energy demand higher.
Can I ask you a personal question?
Sure.
And I don't know if it's a moral question or I don't know what the question is, but there are a lot of people in this room and around the world who are desperate, I think for the right reasons, to want to really end fossil fuels, or at least move us in the right direction. I think actually would think that actually, oil is the equivalent of cigarettes. It's a terrible thing for the world. And I'm so curious, just on a very personal level, how you balance these ideas around. I think you're on the same mission too, to some degree. Mm-hmm. But at the same time, I think it would be impossible for you not to want your business to grow. And how you reconcile that.
Well, first of all, cigarettes are not necessary for the quality of life that people enjoy on the planet today. Energy is. And energy, if you go back to the pre-industrial era and you look at any measure of health, life expectancy, how people spent their time, our society has been transformed in the developed world by the availability of reliable and affordable energy. It has taken people from spending most of their time every day to just working on subsistence and food and warmth, to having mechanized agriculture and transportation and fertilizer and the things that have changed our lives. And so the products that our industry provides have enabled the quality of life that people enjoy today in the developed world. Billions and billions and billions of people on this planet don't live that way. And for them, a propane burner, there are between 2 and 3 billion people on the planet today that use biomass, animal dung, or wood for indoor cooking and heating. And the indoor air quality impact of that is horrific. And so a propane burner is a huge step forward in terms of quality of life and health. And so our products enable human progress. Now, look, every product has consequences. The use of it does, and we're trying to mitigate those. And so the emissions from our products we're trying to reduce. We're trying to invest in new technologies that won't rely on fossil fuels, that can provide energy with different attributes. So I view it as important for humankind that we continue to develop affordable, reliable, and ever cleaner sources of energy.
So what do you make of climate activists? We might even have some in the audience. I don't know.
Usually do when I'm speaking somewhere, yeah.
What's your view?
Look, I think I understand their concerns. We're all concerned about, nobody wants to leave a climate to our children and the next generation that is an unlivable climate. So I understand their challenges. Look, I'm an engineer. I'm a chemical engineer. I live in the world of physics and thermodynamics and economics, where we try to solve problems. And what I try to do is have discussions with people about what are the challenges. I mentioned earlier, the scaling issues on EVs. For the energy transition to be successful, And we've seen in Europe, when there's the risk that their energy prices are going to go so high or there might not be supplies, it changes the discussion. So for an orderly and successful energy transition, we need every solution. And so discussions that rule solutions out, they narrow the solution set. Those I don't think are productive or helpful. Second, we're going to need solutions that can scale, because we've got 8 billion people on the planet today, 10 billion people by the middle of this century, and a bigger middle class. So we need things that can solve problems at scale, and then that will determine the speed. Everybody wants this to go fast, but we've got to have all the solutions in. We've got to scale these things, and that will then set how fast we can go. And so to me, that's the interesting discussion: is how do we harness technology, innovation, markets in order to deliver these solutions?
And I want to talk about some of those technologies, but let me ask you this. A number of your competitors, specifically, I'm thinking of BP and Shell, have recently transitioned their strategies. They were very focused, both internally and I think actually, and definitely externally, around being fossil fuel companies that were transitioning to other technologies. That's what they wanted to be. And now you're seeing a reversal of that, almost a backlash, as if the industry went too fast, that might have actually caused higher prices. How do you think about that? Do you think that's true? What do you think of those new strategies?
Well, I think they'd be good questions for the CEOs of those companies, because I can't explain their strategies on their behalf. But what I would observe as somebody who competes in this industry, both of them had set out, look, we've got a transition strategy. Their transition strategies were different than ours.
But you don't seem to be rolling back your strategy.
No, we're not, because we said, look, we're going to continue to produce the products that power the world today, and we're going to invest in new technologies that we think are going to be a bigger part of powering the world tomorrow. They had actually both indicated they were going to shrink their oil and gas business pretty aggressively, which generates the cash that they invest in these new businesses today. Their shareholders didn't respond to that very positively. And I think what we've seen is that the world still needs the energy we produce today, right? The situation in Ukraine has really brought that to the fore, particularly for Europe. And I think what's happened is both of these companies have recognized, sometimes I talk about, people would like to go to System B, right, which is the zero greenhouse gas emitting economy. And today we have this system that runs 80% of what keeps the lights on, the trains running, the food cooking, everybody arriving here in Aspen on time, runs on fossil fuels. So to go from that to a system that is completely emission-free is the idea. This new system's about 1% built. And if you start turning off the system that enables everything that we have today prematurely, we run the risk of creating really bad unintended consequences. And I think this is what companies are starting to realize, is we have to be able to do both of these things at the same time. It's hard. It's not easy. But I think that they have acknowledged this pace question and how quickly they can transform their businesses. And I think in part driven by, again, their shareholder response to their strategies.
Let me ask you a related question. Larry Fink was here yesterday from BlackRock. And he was sitting here with David Rubenstein. He is somebody who really pioneered, as you know, the idea of ESG investing around environmental, sustainable and governance. And he said yesterday, I don't use the word ESG anymore because it's been entirely weaponized. He says it's been entirely weaponized by the far left and weaponized by the far right. And I think for the past several years, really since the Business Roundtable wrote their letter saying profits are not the only thing we do anymore, we serve all sorts of different constituents, that there has been this remarkable backlash that we have seen to this, mostly by Republican politicians over the past year or two, that has changed the dynamic. Not true in Europe, but very true in the United States.
So I talked to Larry on Friday about this very issue, interestingly enough. And I talked to Larry a lot because, in his letter he writes each year, he's been very specific about some of his beliefs on these things. I still do use the term ESG. And I keep a book on my desk from 1923. So it was published 100 years ago. It's called The Standard Oil Spirit. Our company was Standard Oil of California at the time. And it's a hardback book that talks about the values and belief system for the company 100 years ago. And it talks about protecting the environment. at great length. It talks about our obligations to society, to our workforce. It talks about building sanitariums because at the time smallpox was a real issue within our workforce. So it talks about our commitment to communities, to neighbors, to our employees, and it talks about good governance. And so what I tell people is, our company was actually involved in ESG before there was any term ESG. Right. And I think good companies have always cared about customers, about supply chains, about communities, about the impact that they have and how they can be a force for good. So signing the BRT letter was not a hard thing for me because it essentially codified on the behalf of the BRT things that our company had been trying to do for a long time. I do think that the issue has become weaponized by extreme voices on both sides. Right. And I think you're seeing, you referred to kind of a pushback from the right. I think the left had probably been more vocal on this for a number of years. And I do think you're seeing this kind of pendulum swing back. We saw it this year in our annual meeting where we had a number of shareholder proposals that in the past had garnered a lot more support than they did this year. So investors, I think, are calibrating a little bit on this. So, it's a discussion that's evolving. It's not going away.
What's the political piece of this? You've been public, and you've said that you wish you had a more open dialogue with this administration around energy policy. Mm-hmm. There are a number of folks that are now planning to enter the 2024 race. President Trump, I should say, or former President Trump, told Bret Baier recently, he said one of the first things he would do if he was the president, he said, I'd start drilling again. When you hear that, do you say, right on? Do you say that's terrible? What do you say?
Well, we haven't stopped drilling. So look, the U.S. is going to produce more oil and gas this year than it ever has in its history, including when former President Trump was in office. So my last year about this time, prices were high. The Russian invasion of Ukraine had begun, and markets were concerned that was going to cut off energy supplies. And so, the prices responded to that. And the president and others in the administration engaged in some, I would call it, some rhetoric that our companies were not, companies in our industry were not behaving appropriately, and he didn't have his facts.
This was about pricing,
right? It's about prices,
right?
And so I had a number of different interactions with people in the administration, and felt like the messages weren't getting through, and we really weren't hearing one another. And so he wrote a very public letter to me and some other people, and I wrote a letter back. And we've moved beyond that, but I still think the quality of the dialogue with this administration on this issue has improved from the beginning of its time in office, but it could still be better.
You've mentioned Ukraine and Russia several times. I'm so curious what you've thought about this weekend as we were getting headlines about what seemed like an almost insurrection, but who knew what was happening. What kind of real-time information were you getting, and what do you think this all portends?
Yeah, so we don't have any businesses in Russia or Ukraine. We've got a partial ownership in a pipeline that comes from a neighboring country through a portion of Russia. So it's an area of the world that we pay a lot of attention to. We have, we work in a lot of places around the world, and so we have to have our own intelligence sources and have a really good organization of people that have access to information and relationships that allow us in real time to understand as best we can what's going on. I'm not sure anybody really knows what exactly transpired.
What were you doing Saturday morning?
Saturday morning, I was getting ready to go play a round of golf, and I was also in communication with some of my board members who have unique insights. I was receiving briefings from our security organization and intelligence information. I was watching a number of different news feeds.
But the folks that you have on speed dial were telling you what?
That this was a serious move, that the Rostov-on-Don, where they had taken over the military headquarters, is only about 200 miles from the terminal I referenced that is at the end of this pipeline, which flows over 1 million barrels a day of oil into Europe, critically important to European energy markets, and one that the White House and our team are in constant contact about, because if that were to be choked off, that would be a very bad thing for markets. So I was getting updates on which direction the activity was moving. Was it moving south towards where we are? Was it moving north? And then, as the apparent resolution to this thing was negotiated, I was getting updates on the cessation of things. There are, both parties here, all parties, and multiple parties involved, are skilled in information operations, which sometimes means you fog things up and you don't put out accurate information. And so I'm not sure we really have the full picture of what happened. I'm not.
Is there any meeting that you've had to have as a result of this about any decisions that you would need to make?
No, it settled down. Markets have settled down. The apparent instabilities seem to have settled down, and so no, we've not had to activate any exceptional actions at this point.
What is your longer-term thought, though, about just the situation with Ukraine and Russia, what that portends for the price of oil, the fact, frankly, to tie all these dots together, that so much oil is being sold to China and India still from Russia. Some of that is coming back through into Europe. And whether we should either be doing something about it, not doing something about it?
Well, what we've seen are the sanctions that have been imposed primarily by the EU and the U.S. have dramatically shifted the flows of energy. They haven't actually restricted the flows or constrained them, which was the concern a year ago when prices went high, is there was a lot of belief that we actually see supply shortages. The policies have been very carefully calibrated to not create supply shortages. So the price cap, these various bans that are in place, are designed to keep the oil flowing and to acknowledge that it's going to flow to other markets other than the EU and the U.S. Now, this is the oil. You mentioned India. India's got a big refining system. And oil that gets sourced from Russia, refined in India, can end up in Europe. And so effectively those molecules have just been reconfigured, and then they get back on a ship and they go into the European market. That's why price oil is $70 today instead of $120, which it was about this time a year ago, is because the markets are still well supplied. There's been a belief that the Russian supplies would be cut off more than they have been. And to this point, their production numbers are really just about unmoved from what they were before the war.
Do you think that the U.S. administration and Europe should be doing something different then as a result?
I stay out of offering policy advice. I'm an engineer and a business person, and these are matters that we will.
Let me ask you then, as a business person, is there a way to choke off profits to Russia via oil without undermining the price of oil and energy and the cost of goods in other places like Europe and elsewhere where our allies and we live?
That is the intent of what the U.S. and the EU have done with their restrictions on insurance and shipping, and tying those to a maximum price at which Russian oil could be sold. I have to tell you, and some of the people in this room are probably well familiar with this, oil trading markets are sometimes very opaque. The trading companies, and there's a lot of new companies that have come into oil trading in the last 24 months. The shipping companies can be under, difficult to understand ownership. And there's a lot of money made in working around sanctions. This goes back to South Africa and apartheid. And whenever sanctions are put in place to constrain or reshape these markets, what you find are there are clever people that understand how to make money working around that. And so there are different opinions about how effectively this has reduced revenue to Russia versus just having it show up in a different form.
Let's talk about some of the new technologies that you're investing in. $10 billion between 2021 and 2028, $2 billion, I think, just this year. Actually, before we even get into the technology piece, help us with this. How do you think about allocating your capital today as it relates to new technologies like this, $10 billion, versus having to continue drilling and pumping more oil, and what that balance, if you want to call it that, is supposed to be?
So I'm going to start at the highest level of capital allocation, which is to our shareholders. So our dividend is the first thing we allocate capital to, which we've increased for 36 consecutive years. The second is to invest both organically and inorganically to grow future cash flows to support the dividend. And that investment is agnostic to what type of technology. It's drawn to returns to deliver the cash flow. The third priority is to maintain a very strong balance sheet, because we're in a volatile commodity industry, and the companies that aren't successful, and many of whom are not around today, found their balance sheets were unsustainable when they hit a point of time where revenues collapsed, and then we return cash through share buybacks if we've satisfied those first three criteria. So we've been very consistent in managing the company under that kind of a capital allocation framework for a long time. When it comes down to investing in projects to deliver energy to the world, we have returns expectations for our traditional business. We have returns expectations for our new energies businesses, which are renewable fuels, hydrogen, carbon capture and storage, other emerging technologies.
So how do you look at the returns on the new technologies and what they should be and when they may very well come? Is this more of a venture capital kind of, we're placing a bunch of different bets, all, many of which we think are actually going to end up being zero, but we're hoping one, shoots the moon, versus what we know is a reliable producer of profits and cash?
Yeah. So our returns expectations ultimately for new energies are they've got to compete with our traditional energy businesses. Today they don't. And so we invest in venture. We're on our 7th venture fund. We've been doing venture investing for more than 20 years across a whole range of technologies. We could spend all day talking about those. I visited one of our fusion nuclear investments just last week, and maybe we can come back to that one. We invest in growth stage companies. So this is companies that are moving towards commercial application. 2 big companies in carbon capture and storage that we've recently made 9-figure investments in to scale and grow their businesses. And we're investing in renewable fuels. We last year did an acquisition that was a multi-billion-dollar acquisition of a renewable fuels company, which is generating returns and cash flow today because there's a more established market for that. So ultimately, these things, to scale up and solve the problem we were talking about earlier on climate, we're going to have to mobilize trillions and trillions of dollars of capital in the markets. And that capital is return-seeking, and we can't invest in things that are not going to.
But that's where I was going to go with this, which is there any part of you that says to yourself, I'm investing in these new technologies because, frankly, the public wants me to? That left to my own devices, I actually wouldn't. I'd let the venture capital communities and other investors in other places who are investing in those things, who are interested in that, do that. And maybe if 1 or 2 or 3 of these technologies actually works and we're in a position to buy one or to invest in it when we actually know more, I'll do that. But given the political landscape, just even the consumer landscape and what people want out of a company today, that you think about this stuff.
We invest in them because we believe the future of energy is going to be lower carbon, and we think there's a place for companies like ours that have experience, capabilities, technology, balance sheet, project management skills that can help bring these businesses into the market at scale to be viable parts of our portfolio. So we're not doing this because we feel some.
This is not philanthropy, and this is not marketing.
No, this is running our business. I won't take you through the whole thing, but sometimes we get into the energy transition discussion, and I tell people we've always been in an energy transition. If you go back and study the history of it, it's never been the same. It's always been evolving. There's new technologies coming in from coal to oil to gas to nuclear to hydro to wind to solar, geothermal. It's always been in transition, and so you always need to be investing in things that you can do and that you believe you can scale.
So let's talk about what you think may work. You just mentioned nuclear. Which has historically been one of the great third rails of the energy world for a very, very long time. We were commenting outside when I was walking. Oliver Stone, almost surprisingly, has now put out a documentary in favor of nuclear energy. Realistically, what do you put the probability, not that nuclear energy could work, but that it could work and be politically palatable in a way where it could actually be delivered at scale?
Well, it works today. It's we see nuclear in a lot of countries around the world today. It's become prohibitively expensive in some places, but the old generation of nuclear is not what people are talking about today. Small modular reactors on the fission technology side are very different than the historic fission energy. The company I visited last week in California is one that's been working for 25 years on fusion, which has always been the holy grail, right? Because there's no radioactive waste to deal with. It's what powers the sun. The raw materials are in abundant supply, but it's really hard as a physics problem. This company's on its 5th generation of reactor technology. They can contain a plasma at 70 million degrees centigrade in pretty conventional metallurgy. And their 6th generation reactor, which will be up before the end of this decade, will operate at 100 million C, which is where you can start to actually have a fusion reaction occur. And they've made tremendous progress. I was blown away by the quality of their engineering, the quality of their data, the way they're using AI now, because they've got to gather an incredible amount of data on trial runs, and they're using AI to accelerate the simulation of some of these things. So, is it going to work? We don't know that yet, but is it on a path that nobody could have imagined even a decade ago? Absolutely. So these are the kinds of technologies we need to support, and I believe we're going to find it. I'm a real optimist.
But are you a believer that politically we can find it? Meaning nuclear unto itself is such a stigma, perhaps for the right reasons, maybe for the wrong reasons. We could debate that. But there is such that debate exists. And what would it take, do you think, to actually make this real?
If we are serious about climate, we need nuclear as part of the solution set. It has to be. It has zero greenhouse gas emissions. It is a dispatchable baseload power. When the wind's not blowing and the sun's not shining, if you don't want a gas-fired power plant or a coal-fired power plant, you either need the world's
I don't disagree with you. Do you know politicians that are telling you?
I have these discussions.
I'm so happy you're
people are
this stuff.
Privately, sometimes people say things a little differently than they do in public. There are people that are big supporters of nuclear, particularly fusion, which, again, fusion's been the holy grail. It's further away than fission is. But there are smart people working on this, and I do think we can make that a politically acceptable part of the solution set, yes.
Okay. The other piece, which I think is considered the holy grail, is carbon capture at a reasonable rate, which is to say that carbon capture ostensibly works today, maybe, but the cost of it is so astronomical that the talk of doing it at scale is almost impossible.
So you need to step back and talk about define carbon capture. We do carbon capture today. We store millions of tons of CO2 a year today that we capture off of a project in Australia, one in Canada, and we store it safely in the earth. These come off of relatively concentrated streams of CO2, where it's easy to capture because you've got high CO2 concentrations. And there are certain industrial processes that have that, and that vent the CO2 into the atmosphere historically. That's where you start because that's the most economic. The technologies exist to do that. The most difficult is to take it out of the air that we breathe. Right? Because that's 0.04 of 1% of this air is actually CO2. And so you got the most dilute source. The technology and the thermodynamics on that are simply overwhelmingly difficult, and therefore they're expensive. We've invested in direct air capture companies, one in British Columbia that's got great technology that we're working with them on. One of our peer companies is aggressively moving into direct air capture, but it's hard. And again, you're fighting the fundamental laws of physics and economics there, which have not yet been repealed. And so,
as an engineer, do you think that they ever will be repealed? And the reason I ask is a number of companies, including Microsoft, Alphabet, a number of big technology companies, especially this is right around the Business Roundtable statement and the like, started putting out some very aggressive plans for where they want to be as it pertains to energy. And some of them require effectively rolling back, not just stopping producing carbon, but rolling back their carbon usage to when they were first founded, for example,
right.
Which effectively means somebody's going to have to figure out a way, and it's not just putting new trees in the ground, to actually get the carbon out of the atmosphere to make those numbers work.
So there are a lot of these statements and pledges that have been made, many of them by companies whose primary, the largest source of their emissions are the electricity to run their computers and their lights and their business travel and the like. So they're not inherently heavy emitting organizations. But their strategies are around nature-based offsets, investing in CO2 capture from the air. And I think when the pledges were made, at least some of the CEOs I've talked to probably didn't fully understand the challenges inherent in some of that. And
so you think they're not going to reach those?
Well, I don't want to say that. I believe we are going to address.
Right, but as an engineer, you said there are certain laws of physics which have to effectively be undone.
Well, no, you just look. The things that we take as commonplace today, walking around with a supercomputer in your pocket, 20 years ago, 30 years ago, people said this is impossible. So we're in a period of time where innovation and progress in technology and science has never been faster. And so I don't rule anything out, but all the technologies that we work on, whether it's your iPhone or whether it's fusion, they all still obey these physical rules of the world. And smart people figure out how do we do that better. And so I'm a technology optimist. I believe that we're going to find solutions to this, and we harness markets to scale these things and find solutions that we can't even envision today.
I do want to open up to the audience. So I will in just 1 second, but I do want to ask you this: when you sit with your board and talk about what the world looks like, this is a company that you want, I imagine, to be around 100 years from now. Right? We're in 2023. You'd like it to be around in, 3023. But let's just go out. Mary Barr is talking about 2035. Let's go out to 2050. Go out to 2070. Because you're also making investments that have to have a long-term payoff, even when you're drilling.
Multi-decades.
Multi-decades. First of all, how far out is your farthest out sort of prediction or model for any of your investments currently? And when you think about what the company looks like in 2050 or 2060, what do you imagine it would be?
Yeah, so we're getting ready for our annual board strategy offsite. So we're working on this right now. We look at the world out into 2050 in those discussions. We look at the primary drivers of energy demand, which are population, GDP growth, technology, policy, consumer behavior, and we run scenarios and we evaluate what those things look like, and then where can we compete? What do we have the ability to do? One of the things we've not gone into in a big way are wind and solar, not because we don't think they're good technologies, but we don't bring anything to wind and solar. We don't manufacture panels or turbines. Installing them is something that big engineering and construction contractors do, and we just don't bring any unique capabilities. So liquid fuels, carbon capture and storage, geothermal, things that leverage capabilities that our organization has are the things we look to see where can they grow, what use cases do they address, what problems do they solve. And by 2050, I think our company will still be in the oil and gas business. I think these other businesses, renewable fuels will be bigger, carbon capture and storage will be bigger, hydrogen. We haven't talked about hydrogen.
Where's hydrogen?
Hydrogen is the cost on hydrogen is tough. And hydrogen has a challenge because they're kind of, broadly speaking, you'll hear people talk about hydrogen using colors. Gray hydrogen is what is manufactured today with a pretty heavy emissions footprint. What's called blue hydrogen would capture those emissions and store them. But it's still, the raw materials are fossil fuels. Right. And then green hydrogen is made from electrolysis of water with renewable power. We're working across all three of those. We're investing in all three of those. I hope to have some investments, some sizable investments to talk about soon that we're working on a green hydrogen project here in the United States. We've got blue hydrogen projects we're working on that may be a little bit further out, just given the complexity of putting them together. But that'll be part of our business in 2050 for sure. Costs will have come down. The technology will have improved. Markets will grow for this. There's not a lot of markets for hydrogen right now. It goes into fertilizer and chemicals and refining primarily. We've got to find ways to apply it in transportation, in cement and steel and other heat-intensive manufacturing processes, all of which are being worked on.
Fabulous. Let's open it up for questions. I've still got more, but I do want to give everybody an opportunity if we can. Brianna in the front here. We'll get you a microphone.
Thank you. I think that last discussion piece we were talking about really leads into this question, so it's great timing. So right now, like as you mentioned, the market for energy is transitioning, like with General Motors making promises like that. But regardless of domestic production, China is still leading the world right now with the resources and the tools necessary to make that transition. Do you feel like you're missing out and letting China win in a way in terms of the green revolution by not jumping on the bandwagon like other companies?
Well, I think China's a big and complicated question, Brianna. Geopolitically, militarily, and China has a heavy role for the government in their economy, and they've directed resources into some of these technologies as a high priority. The United States has tried to do the same thing with the Inflation Reduction Act, which will bring a lot of incentives to invest in some of these technologies and bring it here to the U.S. And some of these supply chains I talked about earlier on some of the metals and rare earths that are essential for this, that now are mostly processed in China. The idea that we'll find ways to bring those supply chains into the U.S. really sits at the core of the IRA. There's a lot of people working on that now. So I think, generally speaking, industrial policy by governments is something the U.S. has kind of backed away from. But the Inflation Reduction Act is a big step into that. The CHIPS Act is another one. And a lot of that is about, I think, competing with China economically, particularly in these strategic sectors of the economy. We'll participate in their incentives for hydrogen carbon capture there that we're working on and trying to make those investments here. And we do a little bit of business in China and probably always will, but it's not one of our bigger markets.
I think we had a question back there where the microphone is, and then we'll try to come up here and come around.
Hello. My name is Claire. I work at Check My Ads. The thing that we see at Check My Ads is that next year there are going to be 50 elections around the world. We are in the midst of an acute and urgent global authoritarian power grab. And from a purely business perspective, how do you see that threat or opportunity? Thank you.
Yeah, thanks for the question, Claire. We work in on every continent except Antarctica. We work in places that have governments that, you would say through the lens of an American set of expectations are imperfect for sure. And yet, we're a guest and an investor in these countries. We have to deal with them on the ground as they are. So it makes it hard. We follow, U.S. laws. We try to bring our values on things like safety and protecting the environment to the places where we work everywhere. Our standards are not lower in a country that has lower standards. We try to help them raise those standards. We don't pay bribes. There's a whole series of things actually that some companies that we compete against under their country's laws are able to do, make payments that we won't make. So you have to take a look at each one of these things. To one of Andrew's earlier comments, the life cycle of our investments tends to be multiple decades. And so we have to look through any particular political moment in a country or maybe globally, as you refer to it, and look to the long term and have some assessment on what are the geopolitical risks and how do we manage our way through those, including even here in this country to some of the comments as well. So the administration in any country at any given point in time, we deal with in the short term, but longer term, we really have to take a look at, do we think we can operate in this country? Can we operate at our standards and our values and expectations? And if not, then it's a place we probably shouldn't be doing business. And there are times we slow down. We're in Venezuela right now, as one example. And we're not investing anything in Venezuela other than social money to try to help people that are living very difficult lives and safety and protecting the environment on the operations there, hoping for a better day when investment can come back.
Do you see a moment where you say, what would be the circumstance in which you say, we got to get out of here?
Yeah, I mean, it's a hypothetical because they're all unique. We're exiting Myanmar right now as an example where the circumstances have led us to conclude that the business we're running there and the challenges that come with that are not compatible, and so we're leaving. So it comes, but it's all very situation and fact specific.
Just related, the shift in the consumer mindset, the idea that we do talk about ESG, that people are much more mindful of, which country is an authoritarian country versus a democratic country or this or that, and which companies do business in this country versus that country. Has that changed? I mean, that's clearly changed, just the mindset. Has it changed the way you think you should operate the business as a result?
We've been living with this for a long time because the resources are laid down in some places that aren't very advanced economically, politically. And so we've had to understand how do we don't align ourselves with politicians of any particular stripe in any of these countries. We try to be there for the people of the country and add value to the quality of life, the development of the economy. And we pay our taxes, we follow the laws, but we don't get involved in the politics per se because they can change.
I think we have a microphone here. why don't we go? Oh, you're there. Why don't we come down here, and then we'll come around to you, sir.
Hi, John Michelson, Electric Ladies podcast. First of all, Chevron announced that they would go net zero by 2050, and you haven't talked about that. But also, at the risk of touching the third rail, Chevron made over $35.5 billion in net profit in 2022. Why should our taxpayers go to oil and gas subsidies when you guys have all that money to do what you need to? Why should we subsidize that, especially when we are looking for a cleaner climate?
Yeah. So, look, I'm not a big fan of subsidies, but I don't write the laws either. And so we have to take the laws that politicians put out there, and we operate within those laws. Our industry actually doesn't get subsidies. This is a claim that often gets made. We have tax policies that apply on depreciation or research and development that apply to industries across the entire American economy that, follow those same laws. So I don't think that subsidies are, should be a part of policy. Markets should sort out winners and losers. Let technology, customers, and competition make those choices.
So will you tell that to Congress?
I do. When I visit, that's absolutely. That's a big part of the conversation with Congress, with the administration, is none of us are smart enough to decide which technologies are going to win. Let's let the market sort these things out and let competition sort them out and get rid of subsidies.
Gentleman in the hat.
Thank you. Dave Hodgins, Sustento Group. So I guess coming back or continuing on the topic of subsidies, you touched on IRA. I wonder how any of the credits that are in there impact any of your capital allocation decisions in the near term. And related to that, the methane capture fee, how that impacts the economics of existing projects, if at all. I'm curious.
Yeah, so I'll start with methane. We're in the best performing decile on methane emissions. So we have we don't have routine flaring and venting. We've got aggressive use of everything from aircraft to drones to satellites to ground-based detectors on methane. So our methane emissions profile is very, very low. So the fee, I think, is going to be not an issue for us. It's really targeted at people that have got heavy methane emissions. On your first question, what some of the tax incentives in the IRA will do is they will take investments in technologies like hydrogen and like carbon capture that are today uneconomic, that won't generate a return. They'll make them more attractive. They sunset, they don't last forever. There's a window of time that a project has to start up, and there's only a window of time when those tax incentives would apply. But what they may do, and it's premature to say this, but what they may do, and I think what they're intended to do, is encourage investment in things that are going to bring technologies down the cost curve, make the technologies more cost competitive, which means then they can find a place in the market without that same level of subsidy. We participate in something called the Environmental Partnership, which involves a lot of companies, especially smaller companies that might not have the same practices, technologies, and standards, and try to help advance those to everybody in the industry.
Hi, thanks again. Michael Stubbs from Los Angeles. Could you speak to the recent corporate accountability report that deemed 93% of your carbon offsets as worthless or junk?
I can't because I haven't seen the report. I'm sorry.
Really?
Can I ask you a quick, just a related question, though? I think there's a real and genuine conversation to be had about carbon offsets, at least broadly, if not in respect directly to Chevron. And my question to you is, do you think that the offset market is a real market, is a genuine market, or that there is a lot of, better word, shenanigans going on in that space?
Well, any market that is created by kind of fiat as opposed by real natural supply demand forces is prone to some of the kinds of things you're talking about. This is a market that is a nascent market.
And just to explain, this is a market where people are selling trees, for example, would be. I don't know if you want to explain how you guys do it, for example.
We're not doing a lot of it right now. What we're actually doing is we're looking at how that would fit into our portfolio in the future. But the idea is there's something called nature-based offsets, where you would go into mangrove restoration, which we have done. You can reforest areas that have been deforested. You can help cook stoves get into markets where they're burning very greenhouse gas intensive fuels and reduce that. And then within your overall accounting for your greenhouse gas emissions, those offset other emissions that are more difficult.
The conundrum being that there are forests that, for example, were already conserved that are being counted in these kinds of collections 2 and 3 and 4 times in ways that make them untrue.
The standards for additionality, permanence, verification, there's a whole series of principles that need to be applied if you're going to have a reliable, high-quality offset market. And there's a lot of work going on that, but it needs to be a market that has very high standards of integrity, or you're going to find all kinds of problems like this.
We are going to run out of time. Let's sneak in one more question right here in the front.
Hey, Mike. Sid Wilson, President and CEO of the Hispanic Association on Corporate Responsibility. My question is, you and Chevron have always been, great champions for DE&I, and you have an amazing Chief Diversity Officer, Josetta Jones. Given the current environment where we're seeing more and more pushback against DE&I, what's your message to corporate America as to why it's so important to not only stand strong in support of diversity, equity, and inclusion, but if anything, to double down on DE&I rather than pull back?
I think the business case for DE&I is overwhelmingly evident. We need the skills and talent of people from all different backgrounds, with all different experiences, with all different ideas, if we're going to meet these big challenges that we're talking about today. And so you need to source people. We operate around the world. We need people that come from every country, every culture, every educational discipline, every ethnic and racial background. And then we need them to be their best selves when they're at work. And we need an environment where they can speak up, where they can share their ideas, where they feel comfortable and safe in helping to solve these problems. And so if we can't have that, we won't have the talent to deal with these big challenges. So it's why I appreciate your kind words about Josetta, our Chief Diversity Officer, and it's why we've been on this for my entire career. There's always more we want to do. There's more we can do, but we're not turning away because it's part and parcel of our business strategy, and our success depends upon it.
Final question. It's a curveball. You're a golfer. Live Golf, PGA. Most powerful oil producer in the world. Should they merge?
Andrew, I'm an engineer who plays golf. I'm going to let others. You had a nice interview on this. I think the rest of this is still being negotiated and to be determined. And so I hope, for the good of the game, that there's a solution here that works for everybody.
Mike Wirth, thank you for the conversation.